special event, the Fed live coverage. Today is Wednesday. It's the 15th of June, 2022. And if my watch is correct, then we probably have 20 seconds left. But I already want to use all the time available, because in 15 minutes I think we are headed into a quite volatile event, and now we can start officially. So again, hello and welcome. And let me just here share a hello traders in the chat box. It's on Zoom, but also please be aware that you can also ask, if you're watching this now live via the live stream via the YouTube channel from Admirals, then you can also ask your questions in the chat box there. So I have the tab open here so that I can also see all your questions if you have any. And if you are watching on YouTube right now, check out also subscribe, not just check it out, but subscribe to the YouTube channel. Leave a thumb up here if you like what you will witness in the upcoming minutes. And so let me just straight away share my screen here and the live coverage. And first of all, introduce Admirals as the broker behind this event here. A broker in the industry for over 20 years, with over 8,000 financial instruments being available, global presence with support in local languages. By the way, there's an I. Whoop, there we go. Fully licensed, regulated, and so on and so forth. All information is available at admiralmarkets.com, the website. I highly recommend checking it out. Here, one important aspect: fractional shares being offered right now at Admirals. If you're trading shares right now, we are in a quite difficult environment for long-term investment, let's say. Trading wise, it's awesome, but long-term investments are probably a little difficult. Still, some shares like a Tesla still trading north of 600 USD per share. Probably you're interested in trading Tesla after the event today, probably, and I will show you what is needed from the Fed. That we probably will see a sharp reversal in tech stocks, and also in this context Tesla comes to mind. And if you say, well, I want to start small, like 200 USD or something, but one Tesla is 600 USD or 650, 700 USD a share, no worries. When you look at the offering from Admirals, you will see that it's possible to take 0.2, 0.3 Tesla shares, in fact, and invest the according amount here. So that's just around the introduction. The broker behind this, again, all information is being available on the website, admiralmarkets.com. Today's agenda, we want to have a look at a very important tool, which is key, in fact, to see what the market expects, the Fed Watch tool. And we want to have a look at the so-called dot plot. Today is a special event because today we not just want to see if the Fed will hike rates, which he will, but also we will get an overview of the so-called economic projection. So where do the Fed officials see the rates in the upcoming months, at the upcoming meetings? And I think we will get a very hawkish stance. The question, in fact, is how much of this hawkishness is already priced in? And in this context, what's hawkish and so on and so forth, this is exactly what we want to look at now. So there's a website, and let me just probably do the following. Let me just see if I can copy the link here and share it in the chat box. So it's a tool which is completely for free, and it's available. It's accessible, or the CME offers this this tool. And what you see here is, with what probability do market participants expect the Fed act in a certain way? And so in this context, how do they get these data? So when we look at this CME, the Chicago Mercantile Exchange, we're looking at a stock exchange where you trade futures, options, and so on and so forth. Probably you've heard about how options are calculated, and there's some components like the so-called Greeks, like the Theta, like the Vega, like the Rho. And what they do is they take these Greeks, and they have a tool which they then use, and based on the bets these market participants make in futures and options, they extrapolate or they extrapolate or extradict and what these market participants expect, how they place their bets, and from this they then say, okay, that's the likelihood that the Fed will do this and that based on the opinion of these market participants. So in this context here, what we have now is the target rate probabilities for 15th of June 2022, so tonight. And what you can see here, so with this column, you see 150 to 175. This is basis points, and here you can see the current target rate is 75 to 100. 150 to 175, if you came across 75 basis point likelihood being priced in with 100% probability, that's exactly what these market participants were referring to. When you read this on social media, on Twitter and so on and so forth, this is where they get these numbers from. So they look at the Fed Watch tool, and what they see is that today, after today's rate decision, the Fed will have its target rate at 150 to 175, which is 75 basis points higher than what we are currently seeing here. Then you can see that there's also a likelihood of 100 basis point rate hike by 5%. These are market participants which are very hawkish in their expectation. And now what's very interesting, what you can't see here, but you can find it if you check out the website from the Fed I'm sorry, not the Fed, the CME, and look at the Fed Watch tool, you will see 1 week ago, so on the 8th of June, we had a probability of 4% that the Fed will hike rates by 75 basis points. So 96% of market participants, based on all prices and bets being made on the CME, market participants were expecting that the Fed will hike rates by 90, with a probability of 96% by 50 basis points. And now you probably wonder, where do the extra 25 basis points come from? And there we have the CPI numbers from last week on Friday. So inflation data came in above expectation, which is already, to some extent, it's a surprise. I was somehow expecting probably a top out or some kind of peak inflation environment, which we currently find ourselves in. But instead, we saw, even though it was just a small above expectation read, but 8.6% year on year is quite significant. So the highest numbers since the 1980s, 1981 or something. And that resulted in market participants then saying, okay, we now expect the Fed to come out really hawkish to fight inflation, and thus, let me just check this out. Okay, and thus, then saying, okay, or no, not thus, but you probably have seen current environment, NASDAQ selling off, Bitcoin selling off. All this, the recent run we've seen is mostly due to the cheap liquidity, which was provided by the central bank, by the Fed, and now they are taking away this liquidity faster than we all expected it. And this is then what led risk assets like Bitcoin, crypto especially crash or drop significantly. In this current environment, we can also talk about the crash, but also let risk assets like the NASDAQ tech stocks drop significantly. So then we come already to the point where we say, okay, if we have a probability of 100% that the Fed will hike rates by 75 basis points, well, then most of it is most likely already priced in. And this is the point. So if they just hike rates today by 50 basis points, as they expected 1 week ago, and which was, by the way, also the rhetoric being used from the Fed several months ago, the last event, you probably remember, in March, we already were here with the Fed live coverage, and then we got a quite hawkish stance in their statement, but it wasn't going further or beyond 50 basis point rate hikes, but it was like 75 is not an option at all, even though the market played it to some extent. And this is definitely something we should take into account. So if we get to see a hike below the 75, which the market is expecting here with 100% probability, this is then probably a very bullish environment, especially for tech stocks. So this is already, we can draw a conclusion from, but also very bullish, for example, for, let's call it, inflation hedges like gold, precious metals, for example, and something to definitely keep in mind. If they come out as expected, probably, well, the market is already expecting it. This is like, we've seen a drop already. So this is kind of the old saying, sell the rumors, buy the news then. So if they come out as expected and you say, well, this is now the environment to short into, all the market participants who already shorted the market with the expectation over the last days are then buying back and probably absorbing all the selling pressure and probably pushing equities, for example, or also precious metals higher. This is also an outcome. What's very interesting is definitely then to not just have a look here at what the Fed is expecting to do today, but also what is the market expecting the Fed to do in the upcoming months. Here in this context, you will see this on the website from the Fed Watch tool. If you check out the website, you will see that you have the possibility to also see what is the expectation here based on these Greeks, for example, and options and futures markets. What's the probability? Where do we stand in December? And this is very interesting because you can see that with over 50% right now, we see that the Fed will hike that they will increase the target rate by another 300 basis points. 300 basis points. Today is June. So then we have July, we have September, we have November, we have December. So this is 5 events. 5 events with 300 makes it 5 events makes it likely that they will hike rates in this context then by once 75 basis points as today, and then they continue to hike the other 250 in this context. Yeah, around 300 to 225. They will continue to hike rates by another 75 at one of the events, and then 3, they will continue to do this with 50 basis points. So very hawkish. If we don't get this in the rhetoric or in the so-called dot plot, this is very interesting. That looks, we will look at this once we get the information here. But this is very interesting because every dot represents one Fed member here who has the right to vote. So within the board, I think it's 16 or 17 members. And what you can see here on the right is where do they see interest rates in 2022, but also in 23 and also in 24, and then in the larger horizon here. And this was the last dot plot, which was presented to us here in March. And if you now combine the information we get from the Fed Watch tool and here with the dot plot, you will see that this is quite dovish. So we really should expect here the dots to move higher and probably come into a level around 2023 where we already were for 2022 then. And then what's getting interesting is what do we expect or should expect for the upcoming months after that? So in 23, 24, continue we to stabilize here? Does this significantly change? Probably do we come down somehow? What does this mean? That means that the Fed officials who vote here expect that we have to fight inflation by being more restrictive in monetary policy, but that this is potentially negative for the overall US economy, and that the Fed has to counter this rather sooner than later with cutting rates, probably coming back with their quantitative easing and stop the current so-called quantitative tightening with the reduction of the balance sheet. So taking all these informations, let us come to here the potential scenarios, a table I just wrote down before we started. So it's not, if we look at the chart right now, you will see that volatility will significantly pick up. So you will probably completely overrun by the overall action. And so it makes definitely sense to game plan beforehand and know what you want to see based on a certain outcome, and then take action and potentially trade. By the way, if we take any trades, I'm not really sure whether we do this or not, but if we take any trades, please be aware that if you want to copy them, you take full responsibility and the risk is on your side. So this is for educational purposes only, to really give you an idea on how to prepare for such an event, how to trade such a news event, and how to game plan it, and or where do you get the information from, and then how to use this information. And if we make a trade, well, nice, would would be nice to have one, but please be sure that if you take any trades, I can't guarantee you that this will be a winning trade. So I can be completely on the wrong side, and that the risk is solely on your end. So this is very important information here. And so these are the scenarios. What I will do now, we could easily go through them, but you know what? We keep this neutral scenario. This is the most likely event now with 80% probability at my end. And we will then just check out where we come in. And I prepared already here the chart. And so you have seen that the four markets we will have a look at are NQ100. So this is the NASDAQ. So we will look here. Let me just here zoom in and probably take a 5-minute chart so to have more action. You see now markets are pushing higher already. And there's a very interesting level, by the way, 11,500. We will have a look at gold, at dollar JPY. I tell you why in a few seconds, and then EURUSD. And let's just check out. So 15 seconds to go. And I will check out here on Twitter. By the way, let me just check out with a parallel screen here. You have the chart there. So if I get the information then, and I will retweet this, and I will go through my Twitter feed probably a little later on with all the information, and then combine the information with the table we get to see. So there we go. So now we have the data. So looking at NQ, I would say, yes, they definitely hiked, most likely 75. Let's have a look at gold. Nearly unchanged, very interesting. So mostly anticipated or expected, as it seems. So let me just check out once again. So by the way, this is something which is probably of interest for you. Now you might wonder, is it, I mean, obviously you're waiting for the numbers now coming in on your Twitter feed and so on and so forth. Well, first of all, I want to let the dust settle a little, 75 basis point hike. So that's very interesting. Let me just see what else. Do we see something here? No. 75, just 75. So as you can see, so usually this is the NASDAQ now. Usually this is a bearish event, so something you would expect. Very dovish, and then you get the Fed very, very hawkish with 75 basis points. To just put this in perspective, last time the Fed hiked by 75 basis points, that was in 1994. And shortly after, we nearly saw a default of Mexico, by the way. So that was the so-called tequila crisis. And it's nearly 30 years ago. And now we get the reaction on the downside. Let's just see if this really is getting us lower. And the same is also, by the way, true here for gold. So you can see overall, that's exactly what I mean by it's fully priced in, nearly fully priced in. That's very interesting. So most likely what's more of interest for market participants right now is what will Jay Powell say in 30 minutes at the press conference. Balance sheet reduction will proceed as planned. Nothing new here. So quantitative tightening, yes, they will reduce the balance sheet, but nothing. Says highly attentive to inflation risks. Also very interesting. Interesting. What else do we have? Nothing more. So let me just check out whether there's one Twitter account where we can just get all the information at once, and then I retweet it, and then we take it from there. Hot inflation priced in, very interesting. So, wow. Okay, there we go. So this is a little unspectacular now. But the good thing is, again, we wait till the dust has settled. So I'm not willing to jump into the action right now. But you probably wonder on now what do we want to see and how do we trade it now, especially based on these events which I prepared here on my table. So let's just go out of the chart and look here at these scenarios, and then use this information and probably formulate a trade hypothesis around this. So you can see this. And by the way, I'm sorry. That's probably a better one here. Let me just do it that way. One sec, please. So I told you that we will use Twitter. So if you want to follow me on Twitter, by the way, it's at Jens Klatt FX. And here you can see this is what I just retweeted. Nothing really spectacular, to be honest. So what's more of interest is for us, where's the dot plot? Where is the expectation, especially? Oh, this is interesting. Now what you get to see is Fed signals faster pace of rate increases. Even though the release of the economic projections will be in 15 seconds in this context. So 15 minutes then. 0.70 Federal Reserve red headline, the team coming, get on this, blah, 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 nothing, no. Okay, then we have to wait. In fact, we have to wait till 7:30 UK for the dot plot in this context, but we can just go back here. So this is the information we have: 75 basis points, interest rate on a reserve balance sheet rates to 1.65 from 0.9. So nothing spectacular, everything as expected. And so you can see this here. I refer to this not as the hawkish environment, but as the neutral scenario, since that was mostly priced in. So Fed hikes by 75 basis point, rhetoric Fed dot plot, this is what we have to wait for now, is at, well, 4 hikes probably by 50 basis points, probably a little more, probably one at 75 at the September meeting or something like that. Likelihood 80%. So mostly priced in, mostly expected at my end, but also from market participants based on what we got from the Fed Watch tool. So what's more of interest for us now, especially for you, and I think why you're watching this event now is, okay, how can we formulate a trade idea around this, and what can we make out of this? In case of the NQ100, the NASDAQ, I write depends. So it depends on what to expect. Upside, downside, you've seen that already. So within the first 5 minutes, you saw some spiky action on the upside, downside. So this is exactly what I mean by depends. So you will see in which direction the market will trade then. In my opinion, it's bullish since mostly priced in. So that's my thesis. And now what you can see here is I write long if breaks 11,500 and holds. So this is the first thing. So and that's what I mean with let the dust settle. So if we don't get to see a hold above 11,500 and new intraday highs, probably above these spike highs, probably a little higher than that, I'm not really interested in being long here. I only want to trade if we can continuously hold 11,500. And what I then want to see in the upcoming days is if we can recapture and hold 11,700, so into the weekly close. So that's my thesis, and based on the levels I watch. And now let's go here into the chart, and you can see, so hike, yes, likely scenario. I have an opinion. I say, if we see this, then I'm bullish. But we have to hold 11,500. We don't. You can see that. We spike above that level, 11,600 if I'm not mistaken here somewhere. Yeah. And then we're selling off now. We are dropping. And now we have to look at a higher time frame, what this means. So if we really drop. So far, nothing bad happened, but we failed 11,600. You can see that here. So I extended it a little to 11,700. But these are the former lows, which we just broke on Monday. So today it's Wednesday. And we weren't really able to recapture these levels. If we hold below now, 11,500, I have to adapt now because the market, obviously, I was expecting the 75 basis points to be mainly priced in. Obviously, they are not. Now I remember what happened last week with the inflation. I had a very similar thesis here. And I said, well, if we can hold here this range after this compression taking place something about 2 weeks or so, I say, well, if we can hold here, now inflation comes in around expectation, probably slightly above, but nearly fully priced in, then I could imagine the market breaking this range on the upside. We only broke last week on Thursday on the downside, and we accelerated on Friday. And we saw a very extended move so far. And this is definitely something we should also take into account here now. So what we now say, or what I would say, is the following. So you can see here, we are obviously failing on the upside. We are flushing on the downside. And now let's have a look here. These are new intraday lows, right? So yeah, this is the pre-market. These are the intraday lows. So Wall Street spot lows, we are breaking these. Let's see if we hold below that. If we can recapture that level, probably we will trade around this level into the press conference with Powell at 7:30. If Powell then does not deliver remarks which push us above these lows here, it's around 4:30, yeah, around this. So the intraday lows, we will likely continue to trade lower, and it's highly likely personally, I think that we will see already today an attack here at around 11,100, and then I'll go for a drop below 11,000 in the next days to come. I could imagine the NASDAQ trading as low as 10,700, 10,800, based on the current environment. But, and this is very important now, so we're very short-term oriented with our trading here and with the thesis. So I could imagine this to happen in the days to come, but still, I think we are very extended on the downside, and the market has already priced in much of this hawkishness due to the inflation running really hot right now, which means probably we get a flush below 11,000. Probably we are flushing here below these were the September, yeah, what was the September 20 lows, in fact, after COVID here. And then we saw this massive runoff. We topped out and then pushed higher into the close of 2020, respectively, into March 21. And then we saw another rollover, a level which we weren't really capable of holding here. It was the lows from last year. That was the consolidation low, by the way. So that's why you see here this blue dotted line. In my case, that means something like an inflection. So as long as we trade above, I'm bullish. If we drop below that, that can that accelerates potential on the downside. Then if we now drop the lows here, if we drop 11,000, probably get to see a flush below that level. But if we can't really push and hold below, I could imagine that from here we are probably about to see a sharper bounce. So short term, I'd go for mostly priced in. Still, the market reacts bearish, and we should expect here in this context the NASDAQ to trade lower today, probably in the days to come, depending a little today into the close then and after Powell, if we hold below the intraday lows before the Fed. And then also in the days to come, so a drop below 11,000 is very likely. But if we go shortly below 10,700 without a follow through, I could imagine this to be probably an overextension on the downside, and then we are bouncing from there. So yeah, so that's it. That is on the NASDAQ. So what do we have here? Gold. So why gold? You can see that. Well, gold is very sensitive to yields. You have seen that in the last days, especially. I was surprised. I will show you why. Last week with the inflation data, initially we flushed lower because there was a spike in yields higher. But then the Uni Michigan also released a statement that was the consumer confidence, and that came in at an all-time low. We have never, ever saw a print that low in the sentiment or the consumer confidence of the Uni Michigan. And this then in combination with the inflation, you probably remember we had this here within our Trading Spotlight webinar series. I said a stagflationary market environment is very bullish for precious metals. So stagflationary environment means we see a recession forming and the overall economic environment darkening, let's say, and inflation picking up. So high inflation, and while there's no economic growth, this is an environment in which usually expect, especially precious metals, to perform extraordinarily well. And then we saw this initial sharp push lower, but closed very strong for the week. And then sold off on Monday after it became clear that market participants are now expecting the Fed really to go not really all in, but very, very hawkish and hiking rates by 75 basis points, which wasn't priced in. So right now we get the same scenario here. So we get now the Fed as expected with 75 basis points. We're trading slightly above $20 or something, above 1,800. But now it depends a little on whether we make it above 830, 835. We will look at the chart. Then I see a target around the highs, which we marked last week on Friday. If we drop 810, that was the low from yesterday, 805, 810, if I'm not mistaken, and we drop and hold below, similar to holding lower now in the NASDAQ, then I think that we are likely to get to see a drop below 1,800, even though I also think that the risk reward for longer term engagements long in gold gets more attractive, which means even though if we drop 1,800, we have to see whether we hold below that level. And if I had to take a bet, I'd say 12 months from now, probably 18, gold will significantly trade higher. So I'd be really surprised to see gold trading below 2000 USD. So that's my current view on gold in this context. So let's check out the chart. So where you stand, that's interesting. That's interesting. So now the thing is on the Q, this is still at the NASDAQ here. We spike higher, we spike lower. Market is looking for a direction. So what can we expect now from Mr. Powell? We've seen this also in March. Remember, when we're going back to March, that was the starting point of a massive run higher back then. So that was here. So we flushed lower. That was already before the Fed, and then we saw this massive sharp reversal, which pushed us higher. That was something, I don't know, 13,000 up to 2,000 points or something. Also a scenario. So I wouldn't go fully bullish now. I was very bearish a few seconds ago. But again, if we can hold the lows from yesterday, and if we are now taking on momentum, if we are capable after this flush out on the downside now to take out 11,600, that's a bullish sign. And I could imagine that to be the probably sign that we are likely to push back above 12,000. So it really depends on and whether we can hold now the spot lows or not. So right now we don't really know. Tendency is more to the short side at my end, but still, if we make it above, and especially if we push above the short-term extremes here, that's then a clear bullish sign. So we have to wait. So that's a game of patience, in fact. But we have to know what to look for and what to expect based on the information we get. So that's why it's so important to have these tables here and to have the send out this. So this is very strong in my opinion. So this is a 5-minute chart. This is gold now on a 5-minute chart. And you can see here, that's in comparison to the NASDAQ, we see the market flushing to new lows, but not significantly. So that was just something like $2, $3, $4, $5 or something. And now we are going for 823. So this is the initial extreme. So we are still trading significantly below the intraday high so far. That's definitely we have to go away on the upside to really turn bullish here. But again, on this hike, you usually expect gold selling off. If we don't sell off sharply, and if we're probably now even making it back above 823, 824, that's probably a sign that we are headed and could at least get to see a test here of the region. I made a topic here. So by the way, let me just type this in here, that we get to see here a break above 830, 835, and this could probably then target or let us run up to the levels we marked last week on Friday. So let me just here go to the hourly chart. We zoom in a little, and you can see here. So that was this consolidation. We sold up quite shortly already. Oh, let me just see. Okay, so that was a quite sharp sell-off, which took place over some weeks. So we are definitely in a bearish environment here, but still holding up nicely. So it's not that we are how can I say that we need to be fearful, let's say, at this point, for example, or that we should consider this overall environment to be overall very bearish for gold. Yes, we are short-term bearish, no question about that, but still, I'd say, well, we are holding okay. So let's put it that way. So we are holding okay, and overall, I really could imagine most of this hawkishness being priced in, and with the overall doubts the market participants might have right now, I could really think that we're most likely done probably on the downside. Most of this shock of the Fed really going for 75 basis points now should be priced in, and it's more likely that we are going now for the push higher, especially if we are capable of taking out the highs which we marked in the morning. So if we make new intraday highs now, that's probably a clear bullish sign that we are headed then for 870, yeah, somewhere here, 875, 880 probably. And you can see here, by the way, that doesn't brighten the picture. So there's just some potential on the upside based on the levels we traded off for, which we saw on reaction, let's say, last week on Friday. If we can, in addition to such a bullish break on such a hawkish stance and also on a more hawkish dot plot, break out here or break above this trend line, that would be a clear bullish sign, in my opinion. Since it obviously shows that market participants are saying, yes, we see the Fed coming quite hawkish around the corner. And usually higher yields results in a stronger US dollar, which is usually negatively correlated to gold, which means we are then prone for a drop in gold. But then I say, well, the last numbers from the University of Michigan showed, well, there's lots of missing consumer confidence. So we are likely headed for a recession. And the Fed really, I mean, how more hawkish can we go from here? Is there really so much potential for a more aggressive rate hikes in the near future? Or isn't it that we're probably about to see a sharp reversal if we see elevated volatility in the markets, if we see some kind of sharper sell-off and acceleration on the downside, especially in equities, probably driven by some huge volatility in the crypto market? If this really is the case, we should probably expect the Fed to somehow take a step back here. And by the way, it's not just market related, but also from a political standpoint. Just have a look at what's currently going on in the US with the upcoming midterm elections in November. If you look at the approval ratings from Joe Biden, well, he's at all-time lows. I don't really think that Donald Trump during his presidency was ever that well, I'm not really sure if hate is the real world, but people obviously project their current problems certainly into the US president, respectively into the Democrats, rising gasoline prices, and so on and so forth. So given that, I could imagine that there's now pressure behind the scenes forming, which is probably telling Jay Powell from the Fed, well, Jay, you're a nice guy. Remember that I made you a Fed chair for a second time. So probably you can scale a little back in your restrictive tone. Yes, we see inflation, but still, I have to say, I'd also like to see equities probably stabilizing. Probably this would give my approval ratings a little push on the upside. Sounds a little ridiculous to some extent, but probably definitely something to take into account, especially when we look at the whole package, in which I really don't see why the Fed should go too restrictive. And that being said, is all in all an environment in which gold should usually perform extraordinarily well. So it's probably definitely something to have a look at, even though if we now take a U-turn, and right now it's 20 minutes ago, 10 minutes in the future, we have the press conference. And if this turns out to be more hawkish than anticipated, then we have probably not yet seen the bottom. And we are about to probably drop below 1,800 in gold in this context. So depends a little. Right now, I consider the reaction to be overall positive, to be honest. And still, if we drop 810 on the downside, then a drop below also 1,800 in gold is very, very likely. So then I have a currency pair which is highly positively correlated to 10-year US Treasury yields. Dollar JPY. You've probably watched the price action in dollar JPY over the last weeks, in fact. And it's not just that we witnessed this with excitement, let's say, but also that the Japanese government, respectively the Bank of Japan, is really starting to worry about the devaluation of the Japanese yen. Talking about all how can we say that, all options being on the table. And this is funny because usually if you want to stop a devaluation of a currency, what you usually do is you hike rates. They don't hike rates. They already communicated this. That was the communication of the Bank of Japan back in April, at the end of April. And there's another option they can now choose. They could sell foreign currencies, in this case, especially the US dollar. Now you might say, well, do they have that many USD? Well, they have the most at the Bank of Japan. Why do I say that? Well, it's the biggest creditor. We all talk about China and their huge US Treasury exposure. In fact, the world's biggest creditor of US debt is, in fact, Japan. And this is potential which we shouldn't underestimate. So that's definitely something to worry about. So right now, given that, it already shows that it's only a short-term effect, but given that alone, I'm very skeptical about the JPY. So I don't really think that even such a short-term intervention is capable of turning the sinking ship around, let's say, sinking JPY ship around. But we have to still wait, since we are very extended on the upside already, if we really continue to push higher here in this case. So I say if we break above 136 and we hold, then I continue to follow the trend here, and even even if we get to see this extension on the upside, we have a very liquid currency pair, which is usually one reason to believe that even an extended trend here can continue to trade significantly higher, even though we certainly have to adopt the position size based on our risk parameters and so on and so forth. If we drop, well, let's have a look where we stand. We haven't yet taken a deeper look here at dollar JPY. So that's interesting. By the way, this is an hourly chart, by the way. So this is the daily chart. You can see that here, acceleration on the upside here taking place now. That was over the last 3 weeks around. So with new highs means these are the highest levels dollar JPY is trading at for, I think, 25 years. At the end of the 90s, I think the last time we traded here. You see already it's an extended mode, yes. Right now, we are very similar. The price action as of now is very similar, since most of this was already priced in, as in the NASDAQ. By the way, let me just check where we trade. 441. So still around the spot lows. Let's just see where this ends then. So as of now, volatility is stable. So obviously we're waiting here for the Fed Chairman Powell remarks then in a few minutes. But in this context, so if we now break here to new intraday highs, probably 135, probably even that's already a level. If we break above 35, 36 and make new highs, then I think that this consolidation here is clearly broken on the upside and could potentially also accelerate the trend higher. Why am I that bullish, even though we have this extension here on the upside? Well, to be honest, we see higher lows forming. It's not that we are breaking significantly to new highs. This is probably due to already interventions taking place from the Bank of Japan here. But you can see that the supply here in dollar JPY is obviously diminishing. That's why we get to see higher lows in this context. And if we get to see now a break on the upside, that's a potential reason to then think that we continue to accelerate on the upside and are potentially headed for the next round number, 137, probably 140 on the upside in the days to come. Again, we already have a very extended mode. I'd really prefer a drop lower scenario, which we have. Once we drop 133.50, then I wanna still be long in dollar JPY, but wait for a retest here of this trend line, respectively, of this longer term trend line, respectively, the former highs, and thus the region around. Probably that's 131, 130.50, something like that. And then taking along against that and consider then a trend or a change in character, let's call it, being given once we drop this trend line. So then I don't want to be long anymore. As long as we trade above, a pull-in happens, then I'd take a shot, let's say, where I'd be willing to risk here against then this trend line, respectively, this breakout area. Then, since I consider this trend to be still valid and further upside on the upside, or on the upside, more potential being given, With the information I just gave you around the Japanese government and also the Bank of Japan, you should be aware that it could be a very, very volatile environment you find yourselves in. So even though we have from a pure market perspective, long environment, be aware that we could see a sharp reversal anytime once the Bank of Japan says, well, we are now selling USD to save our currency or to stop the devaluation of the Japanese yen. So that's definitely an information you should take into account and keep in mind when trading dollar JPY. And then there's another currency we want to have a look at here, and it's the EURUSD. You probably have seen that the unscheduled meeting, which took place in the morning from the ECB. They are completely losing control. So you probably remember I wasn't very positive in my recent webinars, which I gave here, and when I was asked about my view on the euro. I was very skeptical. It's not that I don't like euros or being paid in euros, but I prefer to be paid in something like USD or, well, not necessarily Bitcoin right now, but I really, I don't really see a future for the euro. And today, respectively, it already started last week. It was clear that it was a very, very difficult situation that ECB, respectively, Madame Lagarde would find themselves in. And now they came up with like saying, okay, our asset purchase program, the QE, especially the PEP around the pandemic purchase program, the counter COVID downturn asset purchase program they announced two years ago, comes to an end in July. And not just that, they also announced hikes, ridiculously small hikes. I mean, we're talking about 25 basis points in July. We're talking about 25 in September, depending on the incoming data. But if you see inflation running really hot in the Eurozone with over 8%, the last print, it becomes clear that this is just like, this is nothing. It's like a rate hike. You try just to somehow you try to keep confidence in your a managed currency in this case, and market participants realize that. And it's not just that, but with now the demand of Italian bonds dropping, we see Italian yields surging to the highest levels since, I don't know, 2012, 2013 or something. The only one who was willing to buy Italian bonds and to pay for Italian debt was the ECB at levels around 1% for 10 years. And that being said, now sees with the demand not being given anymore, that yields start to surge because no one is buying Italian debt anymore. And this is now putting lots of pressure on the ECB, which resulted in this, and now we are closing the cycle here, in this emergency meeting, which took place in the morning. And so now they're coming, we want to stop this fragmentation of the Eurozone, and we somehow want to cut or keep cut, and it's not cut, but it's like cap rates at a certain level so that we're not seeing an implosion in this case of the Italian economy. But they can't really do this because they have to buy bonds. And so they started to say, well, somehow, and that's at least what I read between the lines, well, we will hike rates to fight inflation, but still continue to buy bonds somehow. Well, this won't work. It puts a smile on your face. It won't work. And it's not just that it won't work, but it's also a potential sign that the euro is probably doomed to fail. That being said, delivers then a clear outlook then in this context for EURUSD, with the yields differential currently showing clear further strength in the US dollar by respectively and expecting rates to, well, if at all, with small hikes and small pushes on the upside, with US dollar being favored over the euro, which means we should continue to expect here a further drop on the downside. I really see EURUSD rather sooner or later dropping to new yearly lows, in this case below 0.350, and that being said then delivers further potential down to parity in this case. By the way, let me just check. So now equity is coming down. You can see this here, but also we can see here the NASDAQ. Now let's have a look here. So this is short now. This is now we're making new lows. Depends a little on the comments from Jay Powell. Let me just check here my Twitter feed again. What does he say? Strongly committed to bringing inflation down. Fed has the tools to restore price stability. So fully focused on inflation. No remarks in terms of volatility in the markets. That's definitely something you don't want to hear as a bull. Clear bearish sign now, and we are holding below the low. So this is the clear sign. We had a last chance but this is very similar also to the reaction we saw on the US inflation data. I really remember that well. We saw an initial spike lower, a bounce, and then we weren't capable of really holding above. And that's then accelerated on the downside. So likely that this will continue to be seen as weak. By the way, let me just check out gold. What do we say here? Okay, so now, well, this is still solid. And let's see. You can see here that there's a big difference between equities and gold. So you can see that in case of the equities, we are pushing below the lows, and you can see we're significantly holding up. Significantly, I mean, well, don't get this wrong, but this is okay. This is not really weak. It's not really strong too. So you probably don't want to be long right now, but you probably want to be long if we now get to see higher highs and break above 827 respectively. You probably want to be long, especially if we break above the intraday highs being found around 835. Yeah, so if we drop here to new lows, that's a clear bearish sign, and then activates 1,800 and probably a drop below that. But as long as we can hold this is not that bad. So also gives me some kind of confidence that my thesis here on gold and seeing an overall, even though inflationary environment with higher yields, especially higher yields not being that positive, and strong USD not being positive for gold, but the overall stagflationary environment being positive for precious metals in the overall context, that this is probably going to play out. Let's just see. Let's just see. So in case of the NASDAQ here, so that's again that's not very positive. Still something to keep in mind. Certainly, we have seen that plenty of times. We've seen some spiky action on the downside. So far, no follow through. It's a bearish sign, no question about that. But still, I would only take a small bet as of now for short plays here, since this has happened plenty of times also in the past, that we then, for whatever reason, saw kind of a not just kind of a, but a crazy bull push on the upside for whatever reason. So right now, price action is clearly on the downside, and we should favor short engagements. But I wouldn't really risk that much on such a trade. But I would probably trade it with smaller size, and especially if we now get to see no follow through on the downside, and there's some kind of bullishness coming up, then probably also switch to a long position then, because then probably we have this reversal for whatever reason environment, and then we push to new intraday highs, which we probably also get a chance to profit from them. So I'm just checking out Tesla here, but this is for regulatory reasons. That's a demo account, so we are not trading live here. Let me just check where Tesla is. Let me just check it here. Yeah, $10 lower. So 690 was a little higher. So here, but this was the initial bullish reaction. Tesla's still holding up well, by the way. That's something to keep an eye on. So EURUSD, let's come back to EURUSD. So right now, you probably wonder how to trade this. I definitely probably go for an hourly chart in this context. You don't want to be long the euro or bet on a reversal, whatever, for this extension on the downside, as long as we trade below 105. If we, and that looks the way it right now looks, if we close here below 105, I think we are definitely headed, and we should look for intraday short engagements where we are trying to sell the bounce, let's say. So that's a beautiful example, by the way. So we saw here, for example, this break on the downside. That's the EURUSD on an hourly chart. You see the break below this consolidation area, similar to this one, even though that was a far stronger consolidation which took place here, dropping here lower. And then what you want to do is you want to see holding below the breakout area, retesting it as we did here. That was on, let me just check. That was on the 10th. Yeah, that was on Friday, last week on Friday. So we already saw this break lower in anticipation probably of inflation data of the day before. And once we held below that, that was the short entry signal. So in this case, let me just probably do the following here. So the scenario, just to get an idea, if we close below this black line, Tomorrow, you want to see us holding here below the lows before the Fed took place, and then shorting it from there with further downside potential below 103. Also very short term, I don't really like to trade EURUSD in the current environment. I don't think the volatility is that attractive, even though it's elevated certainly, but I still favor currency pairs like dollar JPY respectively. If I want to trade the US dollar, I tend to trade gold. In fact, by the way, there we go. This is exactly what I was talking about. Let's just check out the NASDAQ. This is ultra bullish. So this is exactly what I was talking about. So I said, well, this is short. Okay. Then no follow through, and then you start to really think about this. Where does this come from? What's the reason for that? Let me just check my Twitter feed here. Is there any comment? Tightening in financial conditions that we've seen in recent months should continue to temper growth and help break green. Okay. Powell said the decision to raise continues our approach of expectationally moving our policy rate back up to normal level. I do not expect. There we go. 18 seconds ago. I do not expect moves of this size to be common. So that's what we could call this kind of a one-time event. 75 basis points rate hike. Remember, 1 week ago, probability of such a rate hike was 4%. Now we pushed up within 1 week to 100%. We get to see this move mainly due to the CPI last week on Friday. And now Powell comes out and says, yes, we hiked 75 basis points, but I do not expect moves of this size to be common. And this is something which is now bullish. So this is the remark which is out of line, something we couldn't have expected or couldn't have seen coming. So, or somehow speculate probably that we get to see this. But he says 75 or 50 could happen at the next meeting. But given where we currently stand in the market environment, look at this. I mean, we are in bear market territory. The Fed just hiked rates by 75 basis points, the highest ever since 1994. And they never did this in the past, never ever did this in a bear market environment to hike rates at all at this level, respectively at this current level, which shows that currently really, yeah, I'm not really sure if I can say that, but the shit hits the fan right now. And now they really have to wonder, okay, bringing down inflation is one thing, but we can risk crushing our economy. And this is definitely what the market was looking for. So probably this is now the sign for this huge reversal on the downside. Let's see in case of the NASDAQ, if we can make new intraday highs. If we can, then we come back to the scenario table here. And you can see, I wrote depends. I probably tend to go now on the dovish scenario with this remark. And you can see here, this is not depends anymore, but this is ultra bullish. So it's another scenario table here in this case. So just 50 basis points hike and so on and so forth. But again, coming down here and really saying this is a one-time event can bring us here if we break now and hold, and that looks very likely that this will happen in NASDAQ, and we can hold 11,500, then we have 12,000 into the weekly close as a potential scenario. By the way, you can also see this here for gold. It's the same. Gold very bullish, long above 830.35. We already traded 33 when I just watched the chart 2 minutes ago. You can see 75.80 first target, 1,900 into the weekly close, and so there we go. So this is the bullishness we were looking for, and there we go now. So this is really bullish. So this is really bullish now. So I was skeptical, and now we found obviously the remark we were looking for, the bulls were looking for, the bears were looking for, and the bears just say, okay, well then. Well, we probably should step out of the way because this was a one-time event. Let's go. And so now we have our direction, and the rest is, well, I mean, probably we'll make 12,000 today. Why not? I mean, that looks funny. Let's have a look at Tesla here at my chart. 700 now. So $20 high within minutes. Not too bad. So, any questions? Any questions? So I'm talking, and I just hope that you enjoy the event as I do. As you can probably hear in my voice. Let me just check here on YouTube the questions. I think this question was already delivered. So Spaghetti is asking, would you trade right after the release or wait some minutes for clear signals? So I'm obviously waiting till the dust has settled. I was waiting here. Probably you've seen that, but I was entering a long order here on my screen. I'm not in the trading platform, but on my live account. So not joking. So I'm putting in long order, and I was filled somewhere in gold, somewhere here. So around this order, 820 and 22, somewhere here. So currently seeing the market moving in my direction. So I wait till the dust has settled, clear signals being delivered, and then take an action from there. And that makes the most sense. You can see that here. So we were clearly up getting signs, not necessarily in gold, but here, which were not that clear. Again, you could easily come to a bearish conclusion here, but then you say, well, if there's one remark which is completely reversing the path here of what we've seen, then we get to see a strong bullish catalyst potentially, strong bullish dive higher, and this is exactly what we get to see here. So one idea. Now, probably you say, well, that was even too fast and too speculative. How to trade this now? So this is the NASDAQ on a 5-minute chart. So we have a key level now. I think it's 11,600. I'd go with a buy stop around this. A buy limit around this area here. So waiting for a pull in if it happens. That's the question. So now you can see that here. This is like probably similar to what we've seen in March. Placing a buy limit, probably 11,600, 590, something like that. If we get to see a pull in, and then trying to catch somehow the move from here, and then swinging it into the weekly close. So I really consider this to be a clear bullish catalyst. You can see this here also, by the way. So now potentially first target on the upside. This is especially for intraday traders. Gap close from Monday. It's a region around 830, 850 around. But I'm really targeting for the psychological level around 12,000, probably higher than that. Okay, so I don't have a timestamp here on YouTube. I just realized that. So I don't know. I just hope that all questions are now answered. And yeah. So in fact, that's it. So nothing more to add. Now we just follow the price action, and let's just see how things play out here. By the way, let me just. This is also something I should take into account here. How things play out for gold, as I already said, I traded the long side. So let's just see whether this plays out. I just hope it does, because I was already very bullish and somehow a little, not frustrated is the wrong word, but this reversal after the strong move here on Friday, that was something I didn't expect, and didn't expect because I didn't see the 75 basis point speculation picking up. Oh, the interesting thing. So you might probably wonder, Thomas just asked a DAX place. We can certainly have a look here at the DAX. But you probably wondered, why do we look at the NASDAQ? Because I think that's more of interest for us. It's more sensitive. The reaction is stronger, and the market participants really watching, and where volume pours in, and we have clear levels to trade off. In case of the DAX, I just skipped it because I don't think that the DAX it's just like it follows what we get to see in the NASDAQ. And then I want to trade the primary market. That's probably a fair way to put it. I'm also clearly bullish. So you saw the flush out here on the downside. Let me just, this is an hourly chart in the DAX. Let me just have a look here at 5-minute. So price action very similar to what we got to see in the NASDAQ. Very interesting that we didn't break here below that level. In fact, I'm not sure whether I would really trade whether I really would trade the DAX today, but probably focus on tomorrow. If we close strong, this is the next thing. So right now we get to see a clear bullish drive on the upside, no question about that. But what if this is reversed too? So if we don't follow through now, but we spike now on the upside, and then we're dropping back, depending on what comments do we get to see or something. Let's assume we close strong here and then NASDAQ, then certainly we want to be long the DAX tomorrow. What I like to do is really focus on the so-called open range. So time frame between 8 to 9:05 German time then. Get to see an outbreak on the upside. And you can see here a blue line in the chart. This is the EMA, the exponential moving average 50 on a 5-minute time frame. And I prefer to say, as long as we trade above that level, I want to trade the DAX from the long side. So any pull-in you get to see to the EMA in this case is then potentially interesting from a long side, and we can get in with quite attractive risk rewards in my opinion. And with the bullish outlook for the NASDAQ, and if we can clear and hold above here 13,600, well, I don't really see a reason why we shouldn't aim for 13,800, probably 14,000 in the DAX. Yes, I would go again. Spaghetti is asking. You would wait for a bounce. Yes, I wouldn't go for. I'm chasing the price here. So, but I want to wait for a pull in. So this is also very interesting because this is something where we now get to see, can we hold this breakout area? Let's say, can we hold 11,600? So if we're pulling in, you're going long here. Given the current market volatility, most likely that is probably a max risk I would give, something like 50 points, because if you drop 50 points below the breakout area, I don't consider this to be strong anymore. If we hold 11,600, this is a strong signal, and if we then push higher from here, take out the most recent highs around 11,700, we can easily trail the stop to the break even area here around 11,600, and then taking it from there and then managing the trade accordingly in the days to come. Yes. Okay. I'm sorry. I'm so sorry. Yeah, I'm a little excited. So this is like, I love these events. I'm doing this for years now. And I just love these events, but we have to wrap it up. I just hope you enjoyed the event as much as I had fun to present it to you. I hope you learned something, how to tackle these events, how to write down tables, and with several scenarios, how to draw conclusions out of the price reaction itself, not to hurry into a trade in this context, but wait till you get a clear sign, as we got to see. Again, there was no reason not to be bearish, but then you get this remark and this shoot higher here. So this is strongly bullish. And well, even if you gave it a try here, and in this case, for example, I took the shot here in gold. As I already said, I took the shot here. And I could be on the wrong side. Where do I have my stop? Below the extreme point, let's say, of the reaction. And then I'm out. But in this case, I got lucky. The remark is on my side. I get the push higher and then taking it now from there. So now the question is, how much of a run can we get to see here? And these are then the scenario table, where we formulate the targets on the upside or downside, depending on whether you take the long side or the downside. And then we take it from there. So that's it from my end. Happy trading. Have a nice evening. Enjoy yourself, and join me on Friday. We will have a look at. I don't really know the topic, to be honest, but join me on Friday. Register for the Trading Spotlight webinar on the website from Admiral Markets. And if you have any questions around the trades, we can also certainly give it a deeper look on how this thing developed and so on and so forth, how I managed to trade, and then we take it from there. So that's it from my end. So it's a different. Oh, thank you, Anna. It's the difference between institutionals and retail traders. So that's probably a topic very much nearly everyone will really enjoy, because it's especially interesting from a risk management perspective. Something you will probably hopefully love as much as I loved preparing the presentation for you. So that's it from my end. Have a nice evening. Enjoy yourself. Happy trading. Watch your stops. Talk to you again on Friday. I really look forward to it. All the best. See you. Bye bye.